Welcome to today's What Will Move the Market show. I'm your host Prem. It's Wednesday, December 31st, 2025, and here is everything you need to know as the markets open for today. Let's start with Wall Street's overnight performance. US stocks finished lower for the third consecutive session as thin holiday trading continued to weigh on sentiment. The S&P 500 fell 0.14%, closing at around 6,905. The Nasdaq Composite dropped 0.24%, and the Dow Jones slipped 0.20%. This marks the weakest finish to what has otherwise been a strong year for equities. Federal Reserve minutes released yesterday revealed divisions among officials about the path of future rate cuts, with several policymakers expressing caution about additional easing in the near term. Tech stocks remained under pressure, with Nvidia and Tesla among the notable underperformers, while precious metals found some support with gold recovering after sharp selling. Meta made headlines with plans to acquire Chinese startup Manus for over $2 billion in additional AI investment, showcasing continued tech sector appetite for artificial intelligence infrastructure. Now turning to Indian ADRs overnight. HDFC Bank ADR traded at 36.44 with a slight gain of 0.26%, signaling resilience in financial stocks. Infosys ADR moved to 18.2 with modest performance reflecting some caution in the IT sector. ICICI Bank ADR held near 29.85, also showing relative stability. Reliance ADR performance remained muted. The overall tone in Indian ADRs suggests selective buying in financials, while IT names remain under pressure, a dynamic worth watching as the Indian market opens. Moving to Asian markets this morning. Japan's Nikkei remained closed for the year-end holiday, but on Tuesday it ended with just a minor 0.1% decline. Hong Kong's Hang Seng showed strength, gaining 0.36% in early trading, before closing at 25,854. Benefiting from a weaker yuan and optimism about Chinese policy. Shanghai Composite finished virtually flat on Tuesday. Turning to GIFT Nifty, the early morning reading shows a flat to marginally positive bias, with GIFT Nifty futures suggesting a neutral opening near 26,118 levels. This indicates the Indian market may consolidate near current levels as we wrap up the year with thin trading volumes. The broader Asia-Pacific picture remains mixed, but domestic strength from retail investors continues to provide support beneath the surface. On the global news front, geopolitical tensions persist with ongoing concerns about Russia-Ukraine dynamics, while oil markets remain well supported on Saudi airstrikes in Yemen and supply uncertainties. Precious metals rebounded sharply after Monday's sharp sell-off, with silver surging over 5% on December 30th. Gold recovered to above $4,300, signaling renewed safe haven demand. The US bond market will close early today at 2 p.m. Eastern, and equity markets will operate normal hours, with the New York Stock Exchange and Nasdaq remaining closed tomorrow for New Year's Day. Turning to the domestic front, Indian equity indices ended marginally lower yesterday as investors assessed mixed global cues and year-end positioning. Foreign institutional investors continued their cautious stance, selling approximately 3,860 crores on December 30th, reflecting their broader bearish stance this year. However, domestic institutional investors provided steady support, buying over 6,200 crores, demonstrating retail strength. This sharp divergence between foreign selling and domestic buying remains the defining story of December, with DIIs having accumulated over 64,000 crores in the current month. On the technical front, Nifty closed at 25,938, virtually flat from Tuesday, forming a doji pattern that signals indecision at support levels. No major IPOs are launching today. From a technical perspective, immediate resistance for Nifty 50 stands at 26,100 to 26,150 levels. A decisive break above this zone could trigger short covering toward 26,300. On the downside, critical support is positioned at 25,850, with a major floor at 25,700. For Bank Nifty, which showed relative strength yesterday with a bullish engulfing pattern, immediate resistance is around 59,300 to 59,500. Critical support for Bank Nifty is established in the 58,500 to 58,300 zone. Given the year-end consolidation and thin volumes, both indices are expected to trade range-bound with sector-specific moves dominating. On commodities, Brent crude oil remains stable around $61.42 per barrel, with geopolitical support underlying prices. Gold has rebounded to near $4,348 per troy ounce, up 0.54% as of yesterday, signaling renewed safe haven interest. Silver showed remarkable strength, surging 5.32% on December 30th to near $75.99 per ounce, recovering from its steepest one-day decline in over 5 years. These precious metal moves suggest investor nervousness about global macro uncertainty heading into the new year. As we wrap up 2025, the key theme for traders is staying selective and cautious. With volumes thin and positioning unwinding, avoid chasing moves in either direction. Focus instead on high-quality names, where domestic institutions are accumulating and technical setups offer clear risk-reward. Energy and metals show relative strength, while selective financial stocks are holding up well. IT remains under pressure, so wait for clearer signals there. The broader market has delivered remarkable gains this year, so protecting profits and avoiding impulsive trades as we transition into 2026 is the prudent approach. Watch for any changes in the GIFT Nifty bias when Asian markets fully open later, and remember that markets reopen on January 2nd for regular trading. Stay tuned for the evening wrap and send in your questions. Subscribe to this podcast to hear US every trading day. Thank you for joining What Will Move the Market. I'm Prem, and we'll catch you in the next update.